Hey, what's up, Gold?
Hey man, can you hear me now?
Yeah,
Yeah, cool. My mic fixed itself, and I don't know how. So it's working on the computer now.
works for me.
Yeah, me too.
So we're going to look over at our template. Well, not really our template, but what I posted in the triggers channel. And we're going to get going. So let me open up a new analyzer. And let us open up the builder. So let's see, we got one instrument per trigger, 3 conditions max, 1 parameter for optimization. Next it's 5 bars. RTH, include commissions, any time frame. Gotta have 2,000 trades. So let's go to new strategy and we'll call this T1. We already know the exit condition is 5 bars. So we're gonna go to set 2, bars since entry equals 5. And we're gonna start off here with some oscillators. And I think we'll start off with, let's do, where is it? Let's do the Mesa. Mesa stochastic. Keep it on default for now. I'm going to compare some of the lines on it. So we'll do 80. So Mesa stochastic crosses above 80. Enter long, exit after 5 bars. Exit long position. Let's compile. Over to the builder. Let us choose our T1. There it is. And tell you what, it can be on any instrument. So we're just going to choose the best one. Let's run it on our main basket starting out. And we're going to start it on, it's intraday, so we can do 15. And we will give it 2 years of data. To include commission. Trading hours, CME, US index futures, RTH. And that is it. So let's run it on the, just for speed, let's just do 2022. So, let me write out what we're looking for here. Okay, it's starting out, we want one instrument, 2,000 trades. We'll adjust data accordingly. edge ratio greater than 1.2. So it only needs to be one instrument, so that's why we're starting it off with the main basket. So you're pretty much not profitable on most of the instruments, but it is profitable on some. I'm going to go ahead and give it a lot more data because it has to be 2,000 trades at least on one instrument. So we're going to get these up a little bit more. So let's give it like 3 years of data. Should get them up to about 500. So one instrument, 2,000 trades. Edge ratio greater than 1.2. Up to 3 conditions. We can only can optimize one parameter up to 10 iterations. An example is like 10 to 100. No, it's 10 iterations. Increments of 10. 10 to 100, increments of 10. So here we do best on the NQ. So I got 596 trades. Look at the edge ratio. The actual MFE is less than the MAE. So we're under 1 despite being profitable. That's why we're mainly looking at these two numbers. You can see if our ratio is good on any of these. You can see it's pretty much all just 1. This is kind of higher, but barely. 216, 177. Okay, so nothing really going on the 15-minute. Down to the 10. And of course, right now it's just the DSS or the MESA crosses 80 on the default settings. So can't really expect to get too much out of it. So we're going to see if the top performer here gives us a decent edge ratio. Looks like YM is our best performer now. Pretty much sitting right at 1. So once again, nothing going on there. And go down to the 5 minutes. FDAX. Still pretty much at 1. Pretty much at 1. I'm not plotting this on the chart. We need to plot this. So what we're going to do is do mesoperiod. The default is 10. And we're using the D. Actually, I want to be using the K. So let's use the K. There's that. Make sure it's plotted. Okay, it's plotted. So right now we're at, and the default was 20. So our best performer, FDAX and EMD, both give us still like a 1-to-1 edge ratio. So what I'm going to do is just screenshot this. And this is when it crosses above 80. Right now, I'm still going to keep it at default. Wouldn't change it to cross. We'll keep it at 80 and do cross below 80. So going long whenever we cross below 80. Will that give us a better expectancy within the first 5 bars? Looks like definitely not. It's like HO is profitable, but we're at 1. I'm just going to keep it on the 5-minute for now. So we do cross above 50 now. One second. So cross above 50. Let's see how that does. Getting better results now on the NQ. literally like exactly 1 on the edge ratio. Still a lot better on using the 80 level. So that when it crosses below 50, no good when it crosses below. We'll do above 20. Just oversold territory. Nothing good with crossing above 20. How about cross below 20? Nope. You can kind of see how it looks. This looks like a very smooth RSI, basically. You can see when it crosses below 20, it goes long, and so on and so forth. All right. So I'm gonna say 80 did the best for us so far. Crossed above the 80. But we could also look at the signal line. So we can do the K crosses above the D. We can just run it at that first. But the interesting thing about these results with the 80 is that we are just profitable in the first place. Like we're actually profitable overall. Whereas most of these are just, you know, minus 100,000 plus. So let's do the K crosses above the D. the highest value yet on the NQ. Under 1 on the MFE or on the edge ratio. So now I want to specify where the cross occurs. So let's copy and paste. And so when the cross happens, let's say that the K is less. Let's start with an extreme. Let's say the K was less than 20 1 bar ago. So the K 1 bar ago is less than 20. Nothing good going on there. We can check it out on the chart. So when the cross happens, you can see the cross happened here. The K was less than 20. So basically it says the cross has to happen in the oversold territory. Looks like it likes to be really low pretty often. So we can be even more dramatic and say like 5. So it has to be less than 5 1 bar ago. So what's funny is that you've already seen that testing all these triggers basically giving the exact same edge ratios in all of them. I mean, there's just no difference by themselves. Give me 1 second. All right, I'm back. So let's see. What it's looking like, and it's just no bueno. So gold says why 1 bar ago here is because whenever the cross happens, go back to the chart. So here's the cross. Now let's say you just initially think about using the 5 as a threshold. It's like you want to look for the cross when under the 5. When it crosses above the average, it could cross above 5. So we're looking to see where it was at before the cross happened. So it's below 5, and then we take the cross. If you just say it has to be below 5, then sometimes when it crosses, it'll end up being above 5, and then it's not really the initial idea. You could say it has to be below 5 after the cross. Let's say less than, it's not going to really make a difference. But we can do the other extreme. We can say crosses above, or not cross above, but it's greater. This is pretty awkward, but we'll see what happens. Greater than 80 1 bar ago. So it has to basically go overbought and stay overbought and then cross back above it while it was overbought. Wonder how many times that happens. Not very often. Huh. So you get a lot less trades, but profitable on a lot more products. But let's look at the edge ratios. Well, it's probably the best one we've had yet, but it's, I mean, still pretty close to 1. No, that was pretty good. Starting out. Yeah, it needs 2,000 trades once you're said and done. But let's see what this one is. So that's on natural gas. So that's 227. Oops, 227 divided by 180. Cannot type, dude. 227 divided by 184. So that's us on natural gas right now. Let's go to EMD. 510 divided by 43, 105. But pretty impressive performance on natural gas, but of course our trade count is pretty small. And as you can see, it doesn't happen that often. Like I said, it has to go overbought, then cross back above while it's overbought. So you can see right here as an example, and that was a very efficient trade. It went overbought, crossed, and whenever it crossed above, it was already overbought. There's a loser. There's another winner. Oh no, it's actually a very weak pullback. It's like no pullback actually. This price goes overbought and stays overbought and crosses back above the average. But you can see actually it gives some pretty efficient movements whenever it does occur. But obviously, we need a lot more data. So let's run it 2 more years, get 3 more years, just to see. Actually, no. Right now we're just comparing them. see, good edge ratio for this starting out. So we'll take a new screenshot. And this is K. I just made a symbol for cross. There you go. Cross above D. K greater than 80. 1 bar ago. And the edge ratio was like 1.2. It was like 1.2. Or 1.22 or something. Let's go ahead and run this on the higher time frame for a second. Or actually, let's just do it on 4 minutes. How about that? Let's decrease the time frame a little bit. Maybe do the 4 and 3. But so this is kind of gives you an idea of how I would start looking, for a trigger. I chose an indicator and I'm looking at all the different ways initially. Just I could get a trigger out of the indicator before I start trying to add anything to it. I just want to see what I can get out of it by itself and which instruments it might do well on. No optimization yet. No. Just want to see how it can do raw. Just raw performance. Moving down to the 4 minute, we're negative on the natural gas. $2.47. So nothing too impressive here on the 4 minute. We'll do the 3. And if it progressively gets worse on the 3, then I want to try out some of the higher time frames. So nothing going on the 3. So let's move it up. Let's go to the 10 minutes. We are profitable overall. It's like EMD has done really well. EMD and ES. Look at that edge ratio on EMD here. $132. Obviously the trade count sucks, but that is pretty impressive. Let's find some trades. Loser, loser, loser. Where are all the winners at? Oh, it's looking like a damn good short set. That's what it's looking like. But definitely need to include a condition for that. Let's see, 5 bars, 10-minute. Yeah, so let's add a little time filter. Time series less than 2:15. So that way this doesn't happen where it just enters and closes the next to the same bar. Let's go ahead and run it again. Results are better. Let's check out FDAX. $782 divided by 619. Got 1.26. Obviously, we're really lacking on trades here. Let's just give it till 2015. Don't even know if that's going to be enough data. I don't think I have. I don't know how much data I have for FDAX. Well, I wouldn't skip it. I would just want to get more trades with it. Just add more data till you get trades. Which I still don't think 2015 is going to even do that. Might have to stick with the 5-minute chart. Yeah, that is just not enough freaking trades. Good grief. And since we're fractal, I mean, it should be just as powerful on the 5-minute. So let's go back down to 5 and I think let's do 2019. So this is the K crosses above the D. As long as the K was above 80, 1 bar ago. Let's take it back to 2018. much data do I even have for this? I see something's up. It's 2018 only have 3 trades. So lacking on data for natural gas. It seems like natural gas and EMD seem to have been the best performers. To crater. I'm curious. What if we go short? Wow. Setup seems to do a lot better to the short side. It was catching some fat tails there. Can't be having that. Now it's pretty crappy now. Change it back to long. Okay. I think I have decided. How much data do I have for? There's just not enough data to run it on that condition. But the Mesa is so smooth, it just doesn't happen that often. So let's change the oscillator to stochastic RSI. I'm going to do the K, same thing. Stochastic RSI though is a lot more noisy. So stochastic RSI, K crosses above the D. And we're looking at the K for potential optimization. And the K is greater than 80. 1 bar ago. You'll see what I mean. It's a lot more noisy compared to the Mesa. So you should get some more signals. Also, I got about double the trades. EMD now doing the best. You can see how much more noisy stock RSI is. See this edge ratio is 421. Divided by 389. 1.08. Alright. Yeah, I think I like the EMD. Seems to be doing pretty good. Oh. Good grief. More like good in 2022. Yeah, this looks like the indexes are pretty much the best ones. So we'll go to optimization. And we'll choose the indexes. Let's do let's do 5 to 30. Increments of 5. Ain't that funny? It shows a default. It shows a default parameter. Let's do the old 10 to 100. ES 283 on 262. So I want to change. Let's take this back to stock RSI crosses above 80. Stock RSI crosses above 80. Make sure default is 20. Nope, it's 14. Check with this parameter. It's totally not being used. So it's not being used, but won't let me take it away. I just want to add let's call it deviation. Make it a double. And we're gonna try to add a little filter to this. So we got stock RSI crosses above 80. And we're gonna say price close. Do I want to use the close? Let me think for a second. I'll say price low. It's less than the Bollinger midband. I want to look at that deviation. And we're going to use the, give it the whole moving average. So the low is less than the Bollinger. 3 bars ago. So this isn't doing anything, this Mesa parameter, because it wouldn't let me take it off. But now we're going to do this deviation from 1 to 5, increments of 0.5. Let's see what happens. I'm not sure if I plotted it. Look at those ratios, right on the money at 1. That is something. Let's go ahead. I'll use the mid band, that's why. Let's plot it, and I want to change it to the lower band. This Bollinger gives you, trend direction as well, and it looks exceptionally smooth because it's using the whole moving average. So the condition, we need to. I'm going to change this back to the Mesa actually, because I like the Mesa more. Where is the Mesa? Plot on the chart. K crosses above 80. Cool. So the combined results is 37 on 10. Can see if that will do better. Stochastic RSI did way better actually. It's kind of crazy. While we're at it, let's go ahead and do the DSS Berserk. Now I'm just curious. DSS Berserk doing a lot better here. Look at the chart. Of course I didn't plot it. But pretty nice profit factors. We're going to look at the condition here real quick. So let's find us a trade. Okay. So whenever the K crosses above 80, which it does right here. All right there, yeah, it does right on this candle. It looks to see if the low of price 3 bars ago, so 1, 2, 3, it looks to see if that low, you can't see it because the background is black. I guess I'll just change it for y'all. Just make it light gray. It is way too bright. There we go. See, so the low of price was below the Bollinger Band 3 bars ago. So it kind of quantifies a movement that, you know, price needs to be below the Bollinger Band and then kind of rapidly go up with momentum. So let's look at the edge ratio. It's no bueno. Just overall it's probably better, but not really. Still like 1-to-1. You can also say it needs to be below it 2 bars ago. So a little more of a constraint. Too much of a constraint. Let's do the opposite. Let's go up to 4 bars. Might try 5 as well. So it did a better job here. Let's check out the NQ. 463 on 418. $1.10 and on the YM, not much better. And then the combined is pretty much 1-to-1. Let's try 5. Nope. So let's do 4. Let's do the Kelter channels though. Let's put it on lower. Keep it on SMA for the time being. Try the SMA, EMA, HMA. No good using the counters. try the... that's an awkward situation. See low. Let's do greater. Greater than the upper. Low is greater than the upper 4 bars ago. It's kind of weird. And you can see not many trades at all. And of course you get some high edge ratios with that weird scenario. How about some basic trend direction? Try that, then I'll go ahead and call it. Trend equals 1. Using good old trend direction gave us our worst results yet. That's an interesting one. Price is completely outside the bands. We could say that crosses below, or the K crosses above the D, and the low is greater than the counter upper band. So the low is greater than the upper band. Low greater than the upper. And let's just optimize for a minimum adverse excursion. Let's see what it gives us. Yeah, it just made them super skinny to where it always happens, so. Did not give us good numbers. How about the opposite? So K crosses above D, and the high is less than the lower band. Talk about terrible. Did we find a really saucy short setup? Let's find out. Jesus, like it never happens. It chose 0.5. Look at that ratio. It's a symptom of no sample size. Kind of curious to what the other parameter sizes gave us. Because I wanted us to use, look, oh, it's because it's unfavorable or minimum adverse excursion. Let's change it to net profit. It's actually pretty surprising. 318 divided by 252, 1.26 on YM, and on NQ, yeah, 1.18. So that's the short setup, I do believe. So this is whenever it crosses above 80, when it's below, when the high is beneath the upper Bollinger Band, or the lower Bollinger Band. I wonder if once that occurs, we set a limit order to the downside, if that would improve it. Yep, definitely, just getting started with this trigger. You guys can see that we're not even anywhere near achieving this. So like I said in the chat earlier today, it's not going to be easy. but we'll see what we can do. So hope you all have a good one, and I will get back with you all tomorrow. So I'll talk to y'all soon.